Guys, what's going on? My name is Ryan. I trade ETFs and I like to make videos to show some of the technical analysis that I'm seeing in the market. So we've got IYR here today representing our real estate ETF for the week. So let's get started. Here on the weekly, I like to identify long-term trends, and we can definitely see this outlined by this long upward trend ever since 2008, the housing market crash. We have stayed in between this channel here. We've come up and we've touched it several times up top. We've touched it several times in the bottom, and in the weekly chart, it looks like as far as this channel goes, we are on the lower side of this. So this would probably represent a better buying opportunity, in my opinion, for a long-term investment. Keep in mind that I say long-term investment here. When I say that, I mean that buying over here when we are, touching the top multiple times probably wouldn't be my cup of tea. However, I would still be skeptical about buying here in the middle just because, the trend isn't quite identified yet. Wouldn't want to buy at the top again. But as soon as we get over here to the far right-hand side, I get a little bit more interested just because the next logical step is that we should hit somewhere at the top again if this channel holds up. Now, will this channel hold up? I don't know, but we will see in the lower time frames what I'm looking at. Here on our fib, you can just see that multiple support and resistance lines ever since 2008 have been broken, and most recently it looks like we've gotten out fairly convincingly above the 23.6, which is our last resistance zone before setting a double top here at the high up in 2007. One last thing I wanted to mention, or I thought was interesting while looking at the weekly chart here for IYR, is that it looks like every single bottom is marked with a inverse head and shoulders. Inverse head and shoulders marked by this left shoulder, head, and right shoulder, and then we spring higher. This might have been a continuation move, left shoulder, head, right shoulder. We drop here and form our left shoulder, our head, and our right shoulder. Come back up, drop a whole lot, left shoulder, head, right shoulder. And we move up higher, drop, left shoulder, head, right shoulder. And I was trying to see if this was one down here. The case could be made on perhaps the daily that this right here was a left shoulder, head, and then this was a right shoulder. However, I wasn't convinced they weren't quite as clear as previous times. I just thought it was an interesting thing to note here on the chart. Another interesting thing to keep in mind here, and why I'm not taking a position, because I don't think that this downtrend has reversed yet. Notice before that I said that it would be a decent buying opportunity because we are in the right quarter of this channel upwards, and I do believe that. However, I am not convinced that it is the right time here this week, or maybe not next week. Again, this is on the weekly scale, and this is a chart of the last 12 years, so keep that in mind. But I think it's interesting to notice this divergence that we have going here on the RSI. Notice we have lower lows here in the RSI and higher prices. This is a divergence that's been playing out, and on another indicator here in our slow stochastic and CCI, we see that our indicator is pointing down while prices have been steadily moving upwards. Anyways, that's just something to keep in mind. Like I said, it's on the weekly scale, so unless you're long-term investing, I would not mind so much. I used to do this video on DRN and DRV, the 3x ETF. However, I wanted to kind of normalize things and get away from doing analysis on the leveraged ETFs and go to the 1x ETF, because I think you can get just as good a read on the 1x ETF. So we went from the weekly chart down to the daily chart, so I'm going to scrap all this from basically 2011 to 2016, and we're just going to look at the last year. And I drew a channel here, which has been capturing much of the activity here in the last 8-9 months. It's interesting to see another potential left shoulder, head, right shoulder. In fact, I'm just going to bubble that because that's a reoccurring theme that I see. And if I ever see these on the daily chart, I will definitely be looking to get in a position here. We've got another one right here. So yeah, that's just interesting, I guess, to me. Something I'll be looking for. So what are these blue and red lines? They are big M's and big W's. This kind of falls in the realm of Gartley patterns, but I find Gartley patterns to be fairly complicated and also deal with some angles, appropriate angles that I am not quite so much interested in charting, and also they are mainly used for Forex. However, I do find that they stand up pretty well here in regular everyday stocks as well as ETFs. And what do I mean by the Gartley? The Gartley is this pattern right here, and you can see that we have specific angles that refer to Fibonacci, like our 618 or 7.8. 382 and 1.27, 1.618. So this would be the big M that I'm referring to, and this is actually bullish, and we would expect price to go up here, and big W's are bearish, and they're expected to go further downwards. So let's look at what a bearish Bartley or a big W looks like here in just an example chart here from Google search. So, we come in, kind of set this C, and we come up here to D, and you can see that, price fails to hold this this level here after dropping so far down. It gets a little bit overextended and bullish scenario. So this would be a big M. We come up here, A, B, C, D, and you can see that once price gets oversold enough down here to this level, we, go much higher. Again, here's another big W, and we would expect price to fall back down. Big M, and we rise up higher. So that is what I mean by big M and big W. So right here, we can see that our big M played out fairly well. We came up here, back down, up, and then a good entry would be right here, and because we sprung up much higher from this point. However, what happens a lot of times is that once you set in a big M, you'll have a big W, and prices will get overextended, So I think that we have a pretty clearly defined W pattern right here, as well as the channel that we've been in here for the last 9 or so months. This upper line support level has served as pretty firm resistance 3 times. So once rejected here, rejected here, rejected here. And at this point in time, as far as real estate investing goes on a daily scale, I would not be looking to enter a position at this time. Remember, on the weekly scale, I said that it would be a decent idea to do some long-term investing just because we're at the bottom of that channel, but I wasn't so sure because of some divergences in the indicators. This might be the divergence that's playing out here. If this reaches up here and falls back down, the divergences that I would be seeing would be pretty true. So that's what I'm seeing on the daily chart. Let's go to the 2-hour. So here in the 2-hour chart, we see that we have reached this kind of double top here. So I drew a line in the sand. Then with this red line that stretches across here, looks like we peeked our head out above it. And again, this might be, the Gartley. So if you remember on the daily chart, I said that I wouldn't be interested in investing in this just because we are in the upper fourth of this channel, and I like to buy low and sell high. And so right now I see there is probably 3 times as much room to the downside as there is to the upside. There's about a quarter of the way onto the upside here from 81.20 where we're at right now to 82.40, and the downside, is about 78.35. So with that in mind and the strength of, this channel and the trend right now that we have going on, we completed this cup and handle, which I talked about in previous videos. I had a pretty nice trade into this, and then I sold some, and then I bought back down when we started to form this handle over here, and I recently sold out all of my shares of DRN, which again is 3 times ETF. So I expect us to come up here and complete this channel before we see a continuation here to the downside to consolidate a little bit, given that we have broken out of this previous double top resistance area. And I think that we could see ourselves coming down a little bit, consolidating, because we have had a pretty massive run up. And I can see us coming down a little bit more before running up here to hit our 127.2% continuation fib line. And I have this outlined by a box as well as a target here. And as far as once we reach the top of this, I think that this is getting into a little bit longer term predictions. But I could see us coming back down and testing this broken resistance area again. Previous resistance becomes support once it's broken. But the reason that I think that we could have a pullback here is that we, as far as Elliott wave goes, we kind of have a 1, 2, 3, 4, and 5. So I think that we have just completed our 3rd wave from here to here, and we could see a minor pullback and complete our 5th wave, which would make sense as far as the overall 2-hour chart pattern goes. So let's go to the 1-hour. Here in the 1 hour, I just kind of wanted to draw a Fibonacci line to give us an expectation as to where we could fall to, and I think that we could fall to the 78.6% level here down at 80.50, which would be a 60% move, a 70% move downwards from where we're at right now. Get a better picture of the cup and handle that I was talking about. Here we come up this rounded bottom, and then we set in our handle, and once we break above this previous resistance line, which we did here, it was a false breakout, we came back down, and then we shot up much higher. And as far as some divergences go, and another reason that is leading me to believe that we will have a short-term pullback is that our CCI, our commodity channel index, which is used to measure the strength of volume coming into the ETF, is decreasing while price is increasing. So we have our high here, and then we have consecutive lower highs while we have consecutive higher highs here in price. So this is a bit of a longer term divergence, and on our RSI we see that we come up here to about 73, 74, and then the highest on the second round is about 72, 71 as price moves higher here. So I spot two different divergences here on the hour chart. However, the overall chart pattern right now is still very bullish. That's why I'm only predicting a short-term move downwards to consolidate before springing up even higher. On the 30-minute chart, again with our divergence for the CCI, we see that price is pretty much flat right here, while our volume is much lower going into this. And so I'm not sure if this CCI is part of a larger term image here, and we'll see a further drop, or whether or not this short-term CCI divergence is the reason for this short-term drop here. However, on the 30-minute chart, I can see us coming down to the 78.6 level and then shooting higher. That would be my first prediction, and if we do not hold the 78.6% level, which I can easily see happening because we've only set in, there hasn't been much consolidation around this level. We've only come up and touched it once, twice, 3 times. And if we've dropped below this level, I'd say 80-40 is confirmation that the 78.6 didn't hold. I can easily see us coming down here to the next fib level, which is the 61.8 level, where we have far more consolidation. We can see that price has touched it once, twice, 3, 4, 5, 6, 7 times, and there's more consolidation around these levels. And at that point in time, I might be interested in entering a short-term swing position, because my thesis on the daily chart as well as 2-hour chart is that we are going to head higher yet and touch the top of this channel. However, in the short term, I just wanted to note, because I got a disgruntled message from a fan, I guess, who watched a video, and he said, so your thesis is both bullish and bearish at the same time? And he was confused that, from a longer term perspective, like the daily or the weekly or the 2-hour, I was bullish, but when it comes to the 30-minute chart, I was bearish. And so I just wanted to show that my short-term thesis is bearish because of, this is potentially a head and shoulders forming here. We could come up here and then fall back down lower, as well as this divergence here. So that's why my short-term thesis is bearish. We've also just run up so high so fast, and price can't continue this parabolic move forever, and it needs to stop, pull back, and consolidate at some point in time. So my short-term thesis is bearish, but this still fits in with my medium-term thesis, which, if we go back, is that we will pull back a little bit and continue out higher. So I just wanted to take a moment and explain that. Anyways, this has been my analysis on real estate for this week. Some very interesting things happening. Looks like we broke out, and I'll be interested in seeing how price plays out in the week ahead. If you like this video, please like and subscribe for weekly updates. It really helps me a lot. And good luck in trading for real estate next weekend.